Today we're gonna talk about this area right here is the line from which Bitcoin capitulated back in June of last year, 2022. This flashing is the bottom of the 7-month-long trading channel. It's the yellow line here, out of which Bitcoin recently fell. Super recently, and it's not good. It's not bullish. It's good if you're bearish, I guess. And this last one here might be the biggest, baddest of them all, the origin line. What does this all mean? And to be honest with you, all this could be a waste of time because this weekly 10 right here might stop the price of Bitcoin before it ever gets to any of them. However, let's dive in and take a look at what essentially our options are here. I think among the most probable situations is that Bitcoin, you can use the weekly 10 or the daily 70 EMA. I will go ahead and change it to the daily 70 so that it's a little bit more accurate. And I think the algos run off of the more real-time EMAs, which means they multiply things out so you can have more closures, therefore it's more precise. And those are the algorithms that are essentially the biggest money players in the room at any one time. I think among the most probable scenarios is that Bitcoin simply either gets rejected by here, as it might have already put in a rejection, or does some type of failure rejection pattern. And sometimes what that looks like is you can get rejected, pull back, get above, sometimes even bounce and put in the lower high, and then go below it, get rejected by it, and then head down. And if I extend this red line right here, it'll make a hell of a lot more sense what this means. Watch. I drew it the right way. And now I make this red line. Boom. So a lot of times this area right here has already happened. Rejection. Oftentimes you get a pullback. The bigger players in the room want to push the price of Bitcoin up in order to take on more shorts from up higher, make it look like it's getting bullish again because you're putting in another higher low, perhaps add some volatility here. And I'll show you an example. It just happened back here. Like the exact same thing I'm talking about. Actually, I'll show you right now. Watch. Putting in some nice higher lows, some higher highs. Low, higher low, higher low. Boom. Did you see that? Rewind. So put in nice higher highs and higher lows. Now watch at the very, very end. Let me go to the 1 minute over here. Watch. This is honestly, and this is just algorithms getting people out of trades so they can add to their trades. Because getting people out via liquidation or by stops, if those people are short, those liquidations and stops are buy orders. So the big money that's moving this, those buy orders are required for them to take on a short order. It's a 1-to-1. For every one long or one short, you have to have a long sitting there. And the people who are already short go in the right direction. If they get knocked out, every knockout allows an algo, a big algo or whatever firm is pushing this up, to take on the correct position also by knocking the other people out, right? So what? That's exactly what this is. So we're gonna play this by the 1 minute. Again, land of higher highs and higher lows. You're gonna start seeing like a pretty bullish pattern here. I think it's forming right there. Yeah, like a cup and handle. See that? Right here. It starts getting a little swoopy pattern, which is honestly exceptionally bullish. Generally. Watch it again. Up, down. And then it goes straight down. You see how it goes boom, boom. All right. So that same thing could happen, but on a slower basis above this weekly 10. Because the weekly 10, I mean, if the big bad days had incentive to create that little fake out, that juke play, right where we just saw it replay, Well, there's going to be even more incentive to do something stupid around this weekly 10 EMA because there's a lot more. There's going to be a lot more money involved because it's the weekdays now, not the weekend, where there are simply less people playing around in the charts. In addition to, it's a bigger EMA, so no big weekly 10 EMA right here. It didn't touch it, right? It's close to it, but it was the weekend. And now if you get above it, you create this same play where it looked bullish right here where we zoomed in. So now we're zoomed out, so it looks a little bit different. For new viewers, if you don't get to see and learn how price moves a lot across your resources on YouTube, well, you're going to do that here, so you might as well hit the like button to start off, and then subscribe and hit the bell for all alerts, because I'm going to try to give you time-sensitive information in a pretty darn time-sensitive fashion at times. Even though right now it's kind of boring, but when it's not boring, I like to deliver it to you in that fashion very quickly whenever needed. So hit that bell and let's keep moving on here. So again, what you can see happen is, put the highlighter back on, that same pattern happened right here. After it gets up, it forms another higher low after higher high, and maybe not happening on the 1 minute, but this might happen on the 5 minute, or it could be the 1 minute once again. And then it breaks down from there, just like it broke down from here, and then you get a rejection, and that would be your play. Because we humans can't trade this one here. Because at that moment, I cannot stress this enough, it is indistinguishable from a breakout. Unless you are the person that is adding shorts there because you are buying Bitcoin on spot to make this happen. I honestly think it might be the exchanges doing this. That's my theory. Which would actually be for a different reason. Because the buy orders allowing retail or normal people to go short in a certain area, like let's say here, before it goes up in a fake out, those buy orders that are required in order for people like me to go short, I kind of am starting to theorize that those are the exchange's orders to make it look like there's real liquidity. And then after a little bit of calculation, I don't know if there's coordination or what is going on, but my theory is that some way, some shape, some form, because those buy orders were from the exchange, so normal people go in the right direction can be short. Instead of another trader who took on that buy order and doesn't know how to take a loss, therefore that increase of loss from the normal trader is paying the people in the correct direction. But because the exchanges are the ones taking on the wrong direction first, so that we can take on the correct direction, they calculate how much it needs to go up on spot in order to get people out, right? So they're not paying the shorts with their own money, to some degree. I honestly think that's what's happening to some degree. And I can't understand why, I could understand how it could be something different, but these patterns that I'm seeing that we just saw, the thing that describes them, explains it the most, is that the exchanges are doing this. They are creating liquidity on futures and on spot. But also, we already kind of knew on spot, but I think it's also happening on futures. And on futures, if you're specifically creating liquidity, these things actually have to happen by default, mathematically. Because they're not just going to be paying out the people in the correct direction. They have to get them out, right? So it's an if-then statement that it's 100%, like it's a fact if-then, but it's not a fact that it is. It's if it is. So if there is liquidity being made on futures by the exchanges themselves, then these moves are 100% required. Does that make sense? Right. And you're going to be seeing this stuff a lot across Bitcoin price, because there's just nobody playing in Bitcoin right now. The larger traditional finance money is taking their money out. All right, so end of rant there. So the first most probable thing that I think could happen is this shape right here. Does it have to go above and then make a higher low? No, it could also come in form of, it goes above the weekly 10 or the daily 70, then, just can't hold it and then gets rejected, and then maybe does it one more time to get out the shorts and then goes down. Something to that effect. That's it. So this is also a failure. So failure means it goes above but can't stay above. Failure, rejection back. I don't know if this is the most probable because of how I started off this interesting, different video with the music and all that, to point out we have 3 big areas here. Okay? Origin line, the capitulation line from last year, and the bottom of a 7-month-long channel. And Bitcoin just fell out of the 7-month channel back on Monday, the 3rd, 4th and 5th of June. That's when it fell out. And so price might simply be attracted to this area up here. And in every way, it would not be bullish to come up to it in a hurry, because then you're going to fall below even the lowest one, most likely. So if you race up to areas of interest without having built a lot of support, I mean, it's most likely you're going to go straight back down, right? And so a lot of times when you have 3 areas of interest, the algorithms want to go touch it. It's almost like a kid in an elevator, a small child in an elevator. It's hard for them not to touch the damn elevator buttons, right? Like, it's really difficult. So I guess I'm on the wrong side now. But it's the same idea. I think it's going to be very difficult for these algos not to want to go play up here, because it's going to create a lot of, I don't know, it's going to bring liquidity probably, because I think more algos and maybe traditional finance might start doing some crap in here. But I think this area is an elevator button. So I would want to prepare you for this. 28.2, but even check this out. I can't stress this enough. Bitcoin can go past 29K. And it would, so listen to what I'm about to say. Bitcoin can have a strong move up 10 whole percent, which typically is bullish. But if you zoom out in the context of a mid-term time frame mentality, that is simply having fallen out of a 7-month channel, and then it's your first actual big rejection from it. Because the only rejection, a confirmation of rejection, it happened very, very shortly after falling out. It was a day and a half or 2. So that's a smaller term time frame rejection. Yeah, the small term time frames got the confirmation of rejection of this line after price fell out, came back up, got rejected right in the middle of that circle. And that rejection was on Tuesday, June 6th, at the very top of the move. Now, realize though that when different lines cross, so you have a 7-month long channel and an origin line crossing, it often vacuums price, right? But usually when you have 3 things in one area that are of big importance, like 2 of them are crossing. Sometimes they all cross within a short time frame, not necessarily all cross at one exact point. But since one is a horizontal, I guess it crosses back here. With the origin line, it crosses here with the 7-month long channel. We've already passed these, so I think these are out of play and would not add to it. I got a baby cat meowing by my door or something. So realize that I got maybe a little off track. Listen to what I'm about to say. Bitcoin can have 10% move up all the way past above $29,000 and still be bearish, because it is simply a confirmation of bearishness on a midterm time frame standpoint. The only confirmation was super micro and short-term time frames only, right? So if you get a whole breadth of a 4-hour time frame type of chart, which usually has a weekly mentality, if you're looking at the 4-hour chart, you should think weekly. The cyclical nature of the 4-hour chart is roughly every week. So if you think of it on the 4-hour time frame, then I don't know why this baby cat is meowing. I don't know if you can hear that or not. If you think about this, it would simply be its first rejection. But in order to get all the way up there, it's got to go up 10%. And then a lot of sources of information on Bitcoin price are going to let you know how bullish things are. But I'm telling you right now, it would still be bearish. And then it would only become bullish. I can't stress this enough. If it came back down to 28.2 from where Bitcoin capitulated and spent time there. It is not bullish at all until that happens. Because what I just showed you at the beginning, this could be, from a larger time frame standpoint, people in shorts that are in profit from a little while back, well, the algos might want to go get them. And it would be completely indistinguishable from a powerful move up. But in this case, because it's its first rejection, it wouldn't be just indistinguishable. It would look like it would be a convincing bull trap, but it would still be bearish. I can't stress enough. Can't stress enough. So don't get caught up in the idea that once it's up here, it's still bullish. Yeah, it might be bullish, on the micro time frames. If it starts bouncing on the weekly 10 and then lifting up, yeah, sure. And volume comes in, that would be bullish for maybe up to a day and a half or so. Maybe a day and a half to 2 days. But after that, what you're looking for is 28.2 right here is to be used as support. And then it could actually start or begin becoming bullish. Those are the rules of Bitcoin for the next few days here. So I hope you've enjoyed what you've seen here today. You just got Timified worldwide.
There are 2 ways to join the community to get more exclusive content. There are 2 YouTube tiers, which involve access to private live shows, typically at 12 p.m. noon New York time, Tuesdays and Thursdays, in which the higher YouTube tier also gets daily price updates on Bitcoin and other cryptos. And the Discord community offers multiple events each week, as you can see on this real example of a previous community calendar, which would enable you to jump on the live events, turn on your microphone, share screens with me, share your ideas, so we can knock out any questions that you have. In addition to offering tutorial series and other exclusive content to help you in your crypto journey. And what you can do for free, which is amazingly valuable, is to look at the 12 links from 2021 and 2022, which are both in the pinned comment and near the top of the description section of this video. Those are links to videos in which I made technical analyses that now you know laid out. Go back to those videos to see how I was able to use the charts to predict it. It's all for free. I promise I'm here to help you as much as I can in your crypto journey. Community links below.